Lupin Pharmaceuticals in association with Higher Secondary Principals Forum.
Hi students, welcome to the accountancy class. Today we will discuss admission of partner, the chapter we began in the previous lesson. We will discuss in detail about the revaluation of assets and liabilities, how this account is prepared, and how do we basically do the adjustments coming in the problem on admission of partner. So let us have a look at this chapter. Are you ready? Revaluation of account. What does it mean? Now this is the account which is also called the profit and loss adjustment account. You are familiar with the profit and loss appropriation account, what you learned in the first chapter. But here on reconstitution of a firm, an account prepared is called profit and loss adjustment account. What do we do basically on profit and loss adjustment account? We find out the values of assets and also we reassess the liabilities. So on reconstitution of a partnership firm or any business, the assets are revalued, valued again. The balance sheet shows book values of the assets. The purchase price less its a depreciated value over a number of years. The values reflected in the balance sheet, what we call book value, may not be the realizable value of that asset. So on reconstitution, we find out the new value of the asset. Similarly, we reassess the liabilities. The values shown in the balance sheet as liabilities are not reflecting actually the settlement values, the value that we may have to pay finally to settle that liabilities. So we will find out the new values of assets and also we will reassess the liabilities. Then we will find out whether there is any profit or loss arising out of this. So this is done by preparing an account called revaluation account. So revaluation account, which is also called profit and loss adjustment account, is prepared in a very simple way. We will see how this account is prepared. Now when we think about preparing any account, we have to identify the type of account it is. In the 11th standard, you learned 3 groups of accounts according to the traditional approach. There are 3 groups of account according to the traditional approach. Do you remember? You must remember, that's very important. Okay, there are 3 groups. Number 1, yes, personal accounts. Number 2, yes, real accounts. And number 3, nominal accounts. These type of accounts are debited and credited according to a principle. Do you remember what the principle it is? It's very, very important in our life as accounting students and teachers. Yes, that principle is called the golden principle. So the golden principle of accounting, it should really flow in our body. Okay, that much important it is. We can't forget it. What is the principle for personal accounts? Debit the receiver, credit the giver. Very good. Real accounts, debit what comes in, credit what goes out. Very good. And what about the nominal accounts? What is the debit and credit rule for the nominal account? Debit all expenses and losses and credit all incomes and gains. Why do we speak about the type of account? Because Revaluation account is a nominal account. So, as you know that it is a nominal account, it will run with the principle of a debit and credit rule for nominal accounts. That means you have to debit all expenses and losses in the revaluation account. Whenever there is a loss happening in the business due to revaluation of assets or reassessment of liabilities, if it happens to be a loss, you have to show it on the debit side of revaluation account. Revaluation account must be debited. Similarly, when an asset is revalued, a liability is reassessed, if it results in an income, in a gain, okay, it should be shown on the credit of revaluation account. You mean revaluation account must be credited. So, this principle, if you know the preparation of revaluation account. So, let us see how it can be done. Okay, there can be a balance sheet. There can be a balance sheet where you are given certain assets and liabilities. For example, there is an asset given on the asset side, say machinery, it is shown as rupees 50,000. 50,000. Okay. Now, this machinery of 50,000, what is given in the balance sheet is called book value. This is the book value of the machinery, book value of the asset. Okay. Is this the realizable value of the asset? If you go to the factory and find out the real worth of this machinery, you will find that as it is maintained very nicely, it is taken care of by the workers, those who are handling it. This machinery which we have shown at 50,000 may fetch rupees 70,000 if it is sold, if it is realized. So, why not show this is 70,000 which we consider as the revalue of this asset in our balance sheet? The machinery is really worth rupees 70,000. So, here there is an increase in the value of your asset. When you compare the old value, which is the book value, this is your old value, and you are comparing it with the revalue, which is the new value, there is an increase in the value of your asset. How much is the increase in the value of your asset? Yes, it is 20,000 rupees. The increase in the value of your asset is 20,000 rupees. So, is this benefit to the business or a loss for the business? The asset of the business is increasing. Is it good or bad? It is good. It is a gain to the business. So, this gain should be shown in an account called revaluation account. Now, how do we account this? There is an increase in the asset. So, we have to debit the asset account debted to revaluation account. Asset account debted to revaluation account. Revaluation account must be credited. Revaluation account must be credited. Okay, so this is how we pass the journal entries and prepare the revaluation account. So, whenever there is an increase in the value of an asset, there is a gain and you will credit the revaluation account. Alternatively, the asset account is debited. So, asset account debted to revaluation account. Let us look at a liability. Okay, let us look at a liability on the balance sheet. Suppose there is an item called, there is a bank loan mentioned, rupees say 20,000 rupees bank loan. The company, business has taken this loan some time back, some months back or years back, and it is shown at the amount received from the bank as a loan, 20,000 rupees. Is this the amount that we need to repay bank loan? Is 20,000 is enough to repay the bank loan? No. When we go to the bank and tell we want to settle the bank loan account, the bank will charge interest. So, let us suppose the total amount payable to the bank is say 25,000. We needed 25,000 to settle the bank loan. So, here 20,000 bank loan is increased to now 25,000. There is an increase in our liability. How much is the increase? Yes, 5,000 rupees increase in our bank loan. Is it good or bad? An increase in our liability? It's not good. It's not good. So is it resulting into an additional expense or a loss? Or is it a gain? Yes, of course it's a loss. So how do we account it? It is a loss. Revaluation account is a nominal account. Debit all expenses and losses in the revaluation account. So revaluation account will be debited and the liability account will be credited. So this is how we think and prepare the journal entries and pass the entries and post it in the revaluation account. Okay, so when there is an increase in the asset account will be debited and revaluation will be credited. And what about a decrease in the asset? If increase is debited, decrease in the asset must be credited. Yes. So what would be the journal entry for that? Revaluation account debted to asset account. Okay. Now let us look at this account, the preparation of revaluation account. Here we saw all the expenses and losses are debited. So we are going to show all the expenses and losses on the debit side of revaluation account. So when there is a decrease in the asset, it is resulting in a loss, it will come on the debit side. If the liability increases, again it is resulting into a loss, it will come on the debit side. What about increase in the provision for bad and doubtful debts? What it is going to, how it is going to affect the business? If there is an increase in the provision for bad and doubtful debts, that means there is a probability of more customers becoming bankrupt. Is it a gain or a loss to the business? It's a loss to the business. So you are going to debit any increase in the provision for bad and doubtful debts. So these are the items that appear on the debit side of revaluation account, because all these are basically losses. These are all losses. So when there is an income, when there is a gain, we are going to show it on the credit side of revaluation account. So if there is any increase in the asset, there is a gain into the business, that will be credited. If there is a decrease in liability, if your liability decreases, for example, suppose your creditors amount shown in the balance sheet is say 10,000 rupees. But there is 1,000 rupees one creditor who is not likely to claim that amount from us. So our liability is decreasing. We don't have to pay 10,000 now. 1,000 one creditor is not going to claim. So we have to settle the liabilities by paying 9,000 rupees. So there is a decrease in our liability, which will mean we have benefited from this. So the decrease in the liability will be a gain to the business. And also if there is a decrease in the provision, that means there are less chances of our customers becoming bankrupt, insolvent. So we are going to receive most of the debtor, the amount shown as debtors. So whenever there is a decrease in the provision for bad and doubtful debts, that is a gain to the business, it will be credited. Now you can see there are losses on the debit side, incomes or gains on the credit side. If gains are more than the losses, it will result in a profit. If the losses are more than the gains, it will result in a loss on revaluation. And who are going to share this profit or loss on revaluation? Of course, it should be distributed among the old partners in their old ratio. So any profit or loss arising out of revaluation must be distributed among the old partners in their old ratio. If there is a loss, the old partners' capital account must be debited and revaluation will be credited. So old partners' capital account will be debited and revaluation account will be credited. On the other hand, if there is a gain, if there is a profit, the old partners account will be credited and revaluation account will be debited. So this is how we settle or close the revaluation account, by transferring any profit or loss on revaluation to the old partners capital account. Please remember, it is done in the old ratio, the ratio in which the existing partners sharing profits and losses. Okay, so on admission, when you prepare the revaluation account, you have to remember this: the profit or loss on revaluation of assets and liabilities are to be shared among the partners in their old ratio. So it will be shown in the partners' capital accounts. If there is a profit on revaluation, partners are credited, so it will appear on the credit side of partners' capital account. If there is a loss on revaluation, partners are to be debited, so it will appear on the debit side of the partners' capital accounts. Now, the effect of revaluation account in the balance sheet. Revaluation is nothing but finding the value, new value of assets, liabilities. Okay, so whenever there is an increase, it's a very simple information. If an asset is increasing, you have to add the increased amount to the balance sheet. For example, in the previous example what I gave, say machinery was 50,000 rupees. It is increased. So you will add 20,000 rupees, and in the outer column you will show the revalue 70,000 rupees. Okay. Similarly, regarding liabilities, if there is an increase in the liability, you will add it. If there is a decrease in the liability, you will minus it. Okay. See, assets also, if there is an increase, you add, decrease, you less. So this is how you show the effect of revaluation in the balance sheet. Now there are sometimes the revaluation does not appear in the balance sheet. Can you guess when it would be? Yes, when an asset is taken over by a partner at a different price, or when there is a liability which is settled by a partner at a different value. Let us look at these examples. Suppose you are given a balance sheet of A and B. Liability side, there is a bank loan of rupees 50,000. On the asset side, there is a stock rupees 75,000. Now the additional information given to you: a partner A settled bank loan together with an interest of rupees 3,000. So here your bank loan is a liability. This is a liability. Is it increasing or decreasing? We settled, partner A settled the bank loan with an interest of 3,000. So how much he would have to pay to the bank? Of course, he would have to pay 53,000 to the bank, 53,000. So there is an increase in our liability. How it will affect the revaluation? Increase in liability, is it going to be a loss for the business or gain for the business? Increase in liability is a loss. So you will show on the debit side of revaluation account to interest on loan. To interest on loan. What is the interest? 3,000 rupees. So here in the revaluation account we are showing only the increased figure. Okay, the increase, the amount increased or amount decreased. So 3,000 we will show, this is the ultimate loss for us, and this 3,000 plus 50,000, 53,000 was settled. Settled means paid by partner A. So partner A is the giver. We have to credit the giver. So it will appear in the capital account of partner A on the credit side. On the credit side you will write, yes, he has settled the bank loan. So you are going to write bank loan in A's column, 53,000 rupees. So here in this case the revaluation effect will not go to the balance sheet. Why? Because the loan is already settled, there is no more liability. Balance sheet shows assets and liabilities. Okay, there is no more liability, so you don't have to show loan in the balance sheet. Similarly, look at the other example. Partner B took over stock at rupees 71,000. Partner B took over stock at rupees 71,000. What was the value of the stock? Stock was 75,000. Now partner is taking at 71,000. Is the value increasing or decreasing? 75,000 stock is become now 71,000. That means there is a decrease in the value of stock. Is it a loss or a gain? Of course, it is a loss. Whenever there is a decrease in the value of an asset, it is a loss to the business. So again, you will debit revaluation account. You are going to write it to stock. How much is the decrease? That should appear in the revaluation account. 75,000 minus 71,000. The decrease is rupees 4,000. So in the revaluation account, we will write on the debit side 4,000 rupees. And it is taken by partner B. So partner B is the receiver, debit the receiver and credit what goes out of the business. So we will write it on the debit side of our capital account of partner B. Yes, he has taken stock rupees 71,000. Now will this stock appear in the balance sheet? No. Why? It's taken over by partner B. There is no more stock in our business. So these type of adjustments will not appear in the balance sheet. So there are certain adjustments which do not appear in the balance sheet. What are they? It could be an asset taken over by a partner or a liability settled by a partner. So this slide shows the two situations where revaluation effect comes only in the capital account and revaluation account. Okay, it will not come in the balance sheet. What are those situations? It will be capital accounts will be showing the profit or loss on revaluation of the assets and liabilities, and also whenever there is an asset or liability taken over or settled by a partner. So these are the situations that you have to show in the capital account in connection with the revaluation account. Now we will solve a problem on admission of a partner. We will discuss in detail what are the different steps and what are the different things you have to remember to solve a problem on admission of a partner. So be ready with your calculator, with your fair book and with your accountancy notebook and all the stationery. Are you ready? Let us start. Yes, here there is a problem given of Rohan and Sohan, who were sharing profits and losses in the ratio of 4:1. You have to read the full problem at least a few times, minimum twice or thrice. Because when you read the question, then only you will understand what are the different items given there and whether there are any twists in the question or whether it is a direct question, etc. You also have to keep in your mind what is the profit and loss sharing ratio. Okay, that's very important because that's what you are going to apply in your question for sharing profits on revaluation or loss on revaluation. And if there is an adjustment of goodwill, okay, you have to see whether the sacrifice ratio is given or not. What is the method of goodwill that you have to follow in this question, and so on. Okay, and also what are the assets revalued, what are the liabilities revalued, all those things you have to keep in your mind and solve your problem. So let us begin with drawing the necessary accounts for this. You need a revaluation account, partners capital accounts and balance sheet. So this is how you will get a problem for your board examination and even for your formative examination at Goa board. Okay, so you will be asked to prepare these three accounts: revaluation account, partners capital accounts and balance sheet after admission of the new partner. So you have to keep these accounts ready. So you can open the revaluation account, partners capital accounts and balance sheet after admission. Hoping that you have kept these accounts ready, let us begin with the solution. Now, you are given liabilities and assets of the old firm of Rohan and Sohan. Let us begin with from the liability side. Let us go in order one by one item, considering and doing the adjustments it has. So let us start with the capital accounts of Rohan and Sohan. Where do we show capital accounts? We have already opened a capital account. So we have to show these capital balances of old partners, Rohan and Sohan, in their capital accounts. Okay, so where it will come in the capital account? You know that liabilities are credit balances. All liabilities are credit balances and all assets are debit balances. So whenever there is a credit balance in the liabilities, it will appear on the credit side of the partner's capital account. So how do we know whether liability capital has a credit balance or not? Yes, if it is given on the liability side, that means its balance is credit. On the other hand, if capital account is given on the asset side, it would mean the balance is a debit. So here capital of Rohan and Sohan are given on the liability side. So you are going to show it on the credit side of Rohan's and Sohan's capital account. Okay, on the credit side you will write by balance brought down. The same amount you have to copy down. You will copy down 2,86,000 for Rohan and 2,74,000 for Sohan. So this is very simple. You have to just place it in the capital account. You have to take it from the question paper and put it in the capital account. The same figure, there will be no change. Okay, only remember to show it on the credit side. Why on the credit side? Because it's a liability. So all liabilities have credit balances. Please remember it. Now, after writing capital of Rohan and Sohan, you will find the next item given is a reserve. There is a reserve of rupees 20,000. So these reserves or accumulated profits, you may get a profit and loss account, okay, or you will get a reserve, different type of reserves. So these belong to the old partners. Before admitting a new partner, the old partners would like to divide and share this reserve. How do they share this reserve? They will share it in their old ratio. What is the old ratio? 4:1. So if you divide 20,000 in the 4:1 ratio, you will get the share of Rohan and Sohan. How much it would be? Can you calculate? Take up your calculator and do the calculation. 20,000 multiplied by 4/5. 20,000 multiplied by 1/5. So you are getting the amount. Keep it with you. Now let us see where this should be recorded. Again, it is shown on the liability side, means it's a credit balance and it belongs to the partners. So it should be given to the partners. What would happen to their capital when reserve is added to the capital? It will increase. Very good. So there is an increase in the capital account of Rohan and Sohan because they are getting their share of reserve. So increase in the capital is a liability, you have to credit it again. So you are going to show the reserve account on the credit side of Rohan and Sohan. Okay, so you will write it on the credit side by reserve. How do we get 16,000? You already got it, 20,000 multiplied by 4/5. How did you get 4,000? You did the calculation, 20,000 multiplied by 1/5. So the reserves, profits, etc., or accumulated profits, undistributed profits, all these are to be divided, shared among the old partners in their old ratio. Old ratio, please remember. Old ratio is used to share the reserves and profits when it is distributed to the old partners. Very good. So we have taken up capital of Rohan and Sohan. We have taken capital of Sohan. We have done the reserve. Now let us look at workmen's compensation fund. Even this fund is created out of the profits of the business. But this fund is a specific fund. It is not kept as a general fund. Okay, it is not kept as a general reserve. So whenever there is a fund, it is for a specific use. So we have to identify what is the use. It is to provide any compensation to the workers. Okay, whenever workmen are in the factory or in doing business, okay, they may meet with some accidents. or if there are some problems happening to the workmen and they are not able to continue in the business cannot simply push them out saying you are incapable of doing our work. They should be compensated. So, for giving compensation to the workers, a fund is created out of the profits of the business. Now, if you go through the adjustment B, you will find workmen's compensation was estimated at rupees 8,000. There is an adjustment here. Okay, so they have already found out how much amount to be paid. They have not yet paid, only they have estimated. So, they need to keep only 8,000 rupees in the fund. There is a surplus of some 2,000 rupees. The fund is at 10,000, estimated liability is only 8,000. So, there is a surplus of rupees 2,000. The partners can distribute this 2,000 among themselves. So, they are going to share this 2,000 rupees, not full 10,000, only 2,000 which is the surplus, okay, after keeping exact amount for paying the workmen for as their compensation. So, this 2,000 will be distributed just like a reserve now. That becomes a free reserve, okay, just like a reserve, it will increase the capital accounts of the partners. So, where it should come as it increases the capital accounts. Capital accounts are liabilities, increase will be credited. So, it should appear on the credit side of the partner's capital account. Okay, in the capital account you are going to show it on the credit side. In their old profit sharing ratio you will divide 2,000 rupees. So, how much you will get for partner Rohan and partner Sohan? Take up your calculator and check. 2,000 multiplied by 4 upon 5 and 2,000 multiplied by 1 upon 5. Very good. You got it? You got? Yes, correct. So, 1,600 and 400 rupees will be distributed. What about that remaining 8,000 rupees? That will continue to be a liability in the business. Okay, it will be continue to be a liability in the business. So, on the liability side, you will show 8,000 rupees as workmen's compensation. So, workmen's compensation, the actual liability or estimated liability continue to appear in the balance sheet on the liability side. Now, there can be cases where the exact liability is found out and settled, paid to the workmen. If it is given settled, that means there will be some decrease in the bank balance. You will have to minus the amount settled in the bank account, okay, on the asset side of the balance sheet. So, workmen's compensation can come in two ways. One, the adjustment can state the workmen compensation is estimated. If it is only estimated, that means it is not paid, it will be continue to show as a liability. Okay, so it will appear on the liability side. On the other hand, if workmen's compensation is settled or paid, you will minus it from the bank balance on the asset side. Very good. So, we have taken up the workmen's compensation fund. Now, let us take up the creditors. The next item, creditors. Is there any adjustment related to creditors? Yes, adjustment H. This is very important. That is why we need to read the question 2 or 3 times. So, when you consider a particular item of liability or asset, you should be able to remember that there is an adjustment connected with that. So, let us read the adjustment. Creditors worth rupees 1,000 were not likely to claim. So, we have shown creditors as 18,000. That is our liability, 18,000. But out of this 18,000, 1,000 rupees creditors were not likely to claim. Okay, maybe this may be an amount payable to one creditor who is not traceable for so many years. Okay, there is no likelihood of that creditor to come and ask for that amount because so many years, 10 years or 15 years may be elapsed. Or it could be that a creditor out of his good heart, he said he is not going to claim the amount from us. Okay, so it can be different situations. What we are considered is that this 1,000 rupees is not likely to be claimed. So, will it increase our liability? 18,000, 1,000 not likely to be claimed by the creditor. Yes, it will decrease our liability. That means there is a change in the value of liability. So this is going to affect which account? Revaluation account. Decrease in the value of liability, is it a loss for the business or a gain for the business? If our liability decreases, of course it is a gain for the business. Okay, so it should appear on the credit side of the revaluation account. On the credit side, how much amount we have to show? Only that decrease. 1,000 rupees is our gain, not 18,000, not 17,000. Only 1,000 rupees is our gain. So we are going to show it on the credit side of revaluation account. And now in the balance sheet, we will show the new value of our creditors. What would be the new value of our creditors? 18,000 less 1,000, which is not likely to be claimed. The new value of our creditors would be 17,000. So hope you are able to understand. Are you with me? Yes. So 18,000 was the creditors shown in the balance sheet. Adjustment says creditors worth rupees 1,000 not likely to be claimed. So we will minus, okay, we deduct this 1,000 rupees and we will show the creditors as only 17,000 rupees. Now let us go to the next item, bank overdraft. There is no adjustment given regarding bank overdraft. Okay, so you can just copy that amount on the liability side, bank overdraft. It will continue to be a liability, there is no change. So please remember, whenever there is no adjustment, that item can be directly copied and written in the balance sheet. It will be directly transferred. Okay. Now what about the outstanding expenses? Outstanding expenses, there is an adjustment. It is given and the adjustment D, outstanding expenses must be brought up to 940 rupees. So our liability here in the balance sheet is only 540. Now it should be made 940. From 540 outstanding expenses, 400 are to be increased. There is an increase in the liability. Increase in the liability, is it a gain or a loss? What is it? Yes, it is a loss. It is not good for us. Okay, so it's a loss for the business. So this increase in the liability will appear in the revaluation account. Where it will appear? In the revaluation account. It is a loss. Increase in the liability is a loss. So we have to debit in the revaluation account. We have to show on the debit side of the revaluation account. How much is the increase? Only that will appear. What is the increase? From 540 asset liabilities become 940. So the increase is 400 rupees. So the new outstanding expenses account will appear in the balance sheet as 940 rupees. Okay, 540 was there. There is an increase in the outstanding expenses. Now it is going to be 540 plus 400 rupees, 940 rupees. Very good. So we have gone through the liabilities. We have taken up each item by looking at the adjustments given. Very good. Now let us go to the asset side. So when you do like this, one side you are taking up and completing all the items, you are not likely to miss out any items. Okay, because you are going one by one. You can even put a tick mark the items whatever you are posting in the accounts. Okay, if you do like that, there will be no item missed in the question. Now go to the asset side. Bank balance is given 1,13,100. There will be some adjustments on bank account. What could it be? It could be the adjustment A. Mohan brought 3 lakh rupees as capital and also 25,000 towards his share of goodwill. So here the partner is bringing capital and also he is bringing 25,000 rupees towards goodwill. So total he is bringing 3 lakh plus 25,000. It will increase the bank balance of the business. Okay, so you have to add these two items to your bank account, and also it is given adjustment C. Half of the goodwill amount credited was withdrawn by the old partners. So, partners are withdrawing some amount of goodwill credited to their capital account. Okay, so you will have to minus it from the bank balance. Okay, let us see. We will start with the bank account recorded. Bank account 1,13,100. As it is an asset, we will show it in the asset side. The amount will be shown in the inner column. 1,13,100 rupees. We begin with showing it in the inner column. Why do we show it in the inner column? Whenever there is an addition or deduction to be done, whenever there is an adjustment, you can show it in the inner column. Now, regarding the bank account or cash account, you can show the adjustments in the balance sheet itself, or you can prepare a bank account in the working note. Both the ways it is possible. Okay, normally we prepare the bank account, but here as we are concentrating on preparing only revaluation account, capital account and balance sheet, we are showing it in the balance sheet itself. Instead of that, you can also prepare a bank account in the working note. That also is allowed. Some students do like that. Very good. Now, what to do with the capital brought by Mohan? Capital 3 lakh rupees and goodwill also 25,000. So, these two figures will increase the bank balance. So, you are going to show in the bank account there is an increase of bank account with 3 lakh rupees and 25,000 rupees. Now, before we go ahead with the adjustment C, let us remember the capital brought in by Mohan should also be shown in the capital account. It is very important to do the adjustment at the same time in two places, debit and credit. Otherwise, you will miss out some items. So, let us record the capital brought in by the new partner. What would be the entry for capital brought in by the new partner? Very good. Bank account debtor to new partner's capital account. New partner is the giver. His account should be credited. Bank increases, so you will debit the bank account. So, the new partner is Mohan, his capital account should be credited. So, we are going to credit Mohan's capital account with the amount of rupees 3 lakh he brought. So, we will credit by bank. It is gone to the bank account already. So, we will write by bank, he has brought the amount and 3 lakh rupees credited to Mohan's account. Very good. What about the goodwill brought in by the new partner? He has brought 25,000 as his share of goodwill. Whenever a new partner is admitted, he is supposed to bring some premium for enjoying the super profits of the business. Okay, so there can be different situations of partner bringing cash for goodwill, not bringing cash for goodwill and so on. You will learn that in different topics. Okay, so now here the partner is bringing 25,000 towards goodwill. What to do with this 25,000? Of course, it belongs to the old partners, Rohan and Sohan. They were responsible for creating good reputation for the business. They were responsible for choosing a very good location for their business or building up their business with quality and good expertise and efficiency of management and so on. There are so many factors that contribute towards goodwill of a business, and this goodwill can create super profits in the business. So, for enjoying that super profit, a new partner has to pay some amount to the old partners. So, he is bringing 25,000 rupees, and this 25,000 rupees must be distributed in the sacrifice ratio, not in the old ratio. So, the amount of goodwill premium brought in by the new partner should be distributed in the sacrifice ratio which is given in the question. Okay, the adjustment says Mohan acquired 1/5 share in future profits sacrificed by Rohan and Sohan in the ratio of 3:2. So, you are going to divide 25,000 in the capital accounts of Rohan and Sohan in the sacrifice ratio. So, will their capital increase? Of course, it will increase their capital. As it increases the capital, capital will be credited. So, when the goodwill is distributed among the partners, goodwill account debtor to old partners capital accounts in their sacrificing ratio. So, you are going to credit the capital accounts of Rohan and Sohan in their sacrifice ratio. Okay, so the amount of goodwill is credited to Rohan's and Sohan's account, 15,000 and 10,000. How do we get 15,000 and 10,000? Yes, 25,000 multiplied by 3 upon 5. 25,000 multiplied by 2 upon 5. So you are getting the 15,000 rupees and 10,000 rupees. Very good. So we have done goodwill adjustment, and it is given adjustment C. Now, as we have already recorded goodwill, credited goodwill of the old partners, we can take up the adjustment C, that is also related to the goodwill. Half of the goodwill amount credited was withdrawn by old partners. So here you will notice Rohan is credited 15,000 rupees and Sohan is credited 10,000 rupees. So these are the amount credited. Now, half of these amounts, half of 15,000, that means 7,500 Rohan withdraws, and half of 10,000, that means 5,000 rupees Sohan withdraws. So partners are taking some cash from the business. Okay, partners capital will be debited and bank account will be credited. So partners capital account debted to bank account. So it will reflect in the capital account of the partners on the debit side, because their capital is going to decrease. They are withdrawing that amount. Okay, how much amount for Rohan and Sohan? Half of the amount credited in their account towards goodwill. For Rohan, 15,000 was credited, Sohan 10,000 was credited. So half of this amount will be taken by them. So they are taking over 7,500 and 5,000. And how it will affect the bank account? Partners capital account debtor to bank account, we are crediting the bank account. Bank account will decrease by this amount. Okay, so we will show as less in the bank balance. Now, the bank balance will be after minusing 7,500 and minusing 5,000, the final bank balance will be 4,25,000 rupees. So this is how we calculate the bank balance after adding the capital brought in by partner and goodwill brought in by the partner in cash, and minusing the amount of goodwill withdrawn by the sacrificing partners. If they wish, they can withdraw 50%, they can withdraw full 100%, or they can retain the amount of goodwill in their business. Okay, so there are different ways of solving problem. As here specifically given, C, half of the goodwill credited was withdrawn by the partners. We have done it like this. And the account of bank, you may even prepare as a separate account. Whatever we have added will be on the debit side of the bank account. Whatever we have minus will appear on the credit side of the bank account. So you will get the same bank balance for like 25,600 rupees. Okay, now we will go to the asset. We were on the asset side. Bank account we have done. For bill receivable, there are no adjustments given regarding bill receivable. So we will just transfer bill receivable on the balance sheet on the same side, asset side. Okay, on the asset side we will just copy it. 9,400, no adjustment given. Now let us take up the next item, sundry debtors, 37,640. Less PBDD, provision for bad and doubtful debts, 1,600. So we are expecting about 1,600 rupees may not be received. It is only an estimate. Okay, it is not yet happened actually, and we have deducted that possible future loss and shown the debtors as 36,040 rupees. Actually, we are thinking that only that much would be received from them. But if you look at the adjustment number E, it says provision for bad and doubtful debts is not necessary. So what it would mean? It would mean that all our debtors are good. Okay, there is no need of any any amount keeping as a provision for bad debts. All our debtors are financially sound and they are very reliable and faithful people. They would make the payment on the due date or before the due date. So there is no need of keeping any provision for bad and doubtful debts. Very happy news. Our asset will increase. So if we don't want to keep this 1,600, our debtors will be 37,640 rupees. So this is going to be an increase in our assets. How it will be accounted in the revaluation account? Increase in the asset, it is going to be a gain. So it should come on the credit side of the revaluation account. Okay, on the credit side of the revaluation account, we will show there is no need of keeping provision for bad and doubtful debts. So we will credit the revaluation account. There is a gain 1,600. So when we do not keep this 1,600 as provision for bad and doubtful debts, our sundry debtors will be at full value. What is the full value? 37,640 rupees. So students, please note, whenever there is an adjustment given, that provision for bad and doubtful debts is not necessary. It means your assets are increasing. It will also be given sometimes as sundry debtors are all good. There is no need for keeping any provision. That's the meaning of that. Sundry debtors are all good. So we will record 1,600 plus we will put it back and our debtors account will be 37,640. Yes, now let us go to the closing stock, furniture, machinery. Closing stock, there is no adjustment regarding closing stock here. Very good. So we will just copy closing stock in the balance sheet. On the asset side, it is an asset, so just copy it on the asset side. The same amount, 1,75,000 will appear. What about furniture and machinery? Furniture and machinery were revalued at rupees 90,000 and rupees 1,95,000 respectively. So that is the adjustment saying. They have revalued these assets. Furniture is revalued at 90,000 rupees. What was the book value of furniture? Old value was 1,05,000 rupees. 1,05,000. Now the revalue is 90,000. So the revalue, the new value is become less. What we have shown in the balance sheet is 1,05,000, but actual realizable value of furniture is less, 90,000. So how much it is becoming less? 1,05,000 minus 90,000, you will get 15,000. So there is a 15,000 decrease in the value of our assets. How it will appear in the revaluation account? Decrease in the value of asset. Is it profit? Is it good? No, it's a loss for the business. It's a loss for the business. So on the debit side of revaluation account, we are going to show this loss of 15,000 in the furniture account. So furniture account will be shown on the debit side of revaluation account. Revaluation we are debiting. Revaluation account we are debiting because there is a loss of 15,000. Now as this loss is considered now, what is the real value of furniture? The value of furniture in our books will be now less 15,000 rupees. So from 1,05,000 rupees, we will minus 15,000 and we will get 90,000 rupees as the value of furniture. Now what is happening to machinery? Machinery is shown 1,77,000, but the revalue is higher. Very good. Revalue is higher. The machinery is kept very well. Okay, it is oiled and maintained, serviced very well. So its realizable value is 1,95,000. How much is the increase? The new value is more. Okay, so there is going to be a gain for the business, good for the business. So from 1,95,000, if you minus 1,77,000, you are going to get a gain of 18,000 rupees. Okay, and this gain should appear on the credit side of revaluation account. On the credit side, you are going to show 18,000 more. Okay, 185 plus 10, 195. So 18,000 increase in the value of your machinery. So that will be 1,95,000 now. So in the balance sheet, we will show the value of the machinery as 1,95,000. So we have taken up all the items in the balance sheet. Before you confirming it, you can go through capital, reserve, workmen's fund, creditors, bank overdraft, outstanding expenses, bank, bills receivable, debtors, stock, machinery, furniture. So all the assets and liabilities are covered with. Now let us go through the adjustments. Mohan brought 3 lakh as capital, that's done. Goodwill is adjusted. Okay, we have taken into consideration the sacrifice ratio. Compensation estimated is shown. Half the goodwill we have already shown the withdrawal of that. And outstanding expenses we have taken into account. Provision for bad and doubtful debts not necessary, we have not considered. Yes, a typewriter which was written off as bad must be brought into the books at 750 rupees. So this is called a hidden adjustment. An adjustment that's not connected with any asset or liability given in the question, given in the balance sheet. So don't miss out these adjustments. You have to carefully go through each and one adjustment, and you have to see that it is done. Okay, you have taken into account. Okay, let us consider this. A typewriter which was written off as bad must be brought into the books. So the very first thing is to identify whether it is an asset or a liability. This adjustment, is it connected with an asset or a liability? Typewriter is an asset of the business. Very good. So it is something regarding the asset. Now asset can increase or decrease. That's what you are going to do on revaluation. Okay. So here there was a typewriter which was written off as bad. So we have not considered any value for that for some time, but now it should be brought into the books at 750 rupees. Maybe there is someone to get it for 750 rupees. So it has a realizable value of 750 rupees. So show this in the books of the account. So this is an asset, typewriter is an asset, and it is having a value which was 0 earlier. So there is an increase in the value of your asset. It is resulting into a profit. So you are going to show it on the credit side of the revaluation account. Very good. So on the credit side of revaluation account, you will write typewriter at its value which is given in the adjustments. The realizable value is 750 rupees. So you will show it. And this is a new asset that you are going to add up in your balance sheet. So you will show typewriter at 750 rupees in the balance sheet on the asset side. Very good. Now the next adjustment is furniture, machinery. Then creditors not likely to be claimed. All that we have done, we have taken up all the adjustments. Now we have to balance the accounts one by one. So this is the last step. You should balance the accounts at the end after recording all the items and adjustments. Finally, you can balance. Look at the revaluation account. It has a debit side with losses and credit side with gains. So which side is going to be more here? Of course, it has gained more. So you will find out the total of the credit side, and the same total will be written on the debit side. Okay. So you are going to find out the total. The total is going to be 21,350 on the credit side, that is the heavier side, and we have written the same amount on the debit side, but the debit side losses are not 21,350. So there is some profit on revaluation. Let us find out the profit on revaluation, and this profit should be distributed to the old partners. How it will be distributed? In their old ratio. What is the old ratio? 4:1. So we will find out what is 4/5 of 5,950 and what is 1/5 of 5,950. This will be distributed among Rohan and Sohan. So I hope you have understood how we are getting this 5,950. This is nothing but 21,350 minus 15,000 minus 400. So 15,400 we are minusing from the total income. the total expenses we are minusing from total income. So you are getting a profit of 5,950, and this should be transferred to the capital accounts of Rohan and Sohan. Okay, so it should go to the capital accounts of the partners. Now, capital accounts should be credited here. So, revaluation account debtor to capital accounts. That means capital account should be credited. It will appear on the credit side of the partner's capital account. Let us see, on the credit side we will write revaluation has resulted in some gain, some profit. So, this is added to the partner's capital account. Only it belongs to the old partners. Sohan does not get any share out of the revaluation profit, and he need not have to bear any loss on revaluation also. Mohan, the new partner, need not bear any loss on revaluation also, because it belongs to the old partners. The profits on revaluation belongs to the old partners. That's why we divide it in the old ratio. Now let us balance the capital accounts. Again we will see which side is more. Capital accounts are all having credit side more. So we will find the total of the credit side of Rohan, Sohan and Mohan. You can total the credit side of all the partners. When you add up the credit side, you will get 3,23,360 for Rohan, 2,89,590 for Sohan, and 3 lakh for Mohan. The same total should appear on the debit side. So we will write it on the debit side also, the same amount. For Rohan, the same amount, 3,23,360 and so on. Okay, now we will find out the balance of Rohan, Sohan and Mohan in their capital accounts after doing all the adjustments. Okay, so let us minus. How do we find it? 3,23,360 minus 7,500 will be Rohan's capital. So how much it would be? What would be the balance of Rohan? Take up your calculator and minus it. You will get 3,15,860 rupees. Same calculation you can do for Sohan. 2,89,590 minus 5,000 rupees. So you will get 2,84,590, and there is nothing to deduct from Mohan. So the balance of Mohan will be same 3 lakh rupees. So these are the capital balances. And where should we show capital balances? It should appear on the liability side of the balance sheet. Okay, so partners credit side is more here. That means the balances are credit. Okay, carried down on the debit side, it should be brought to the credit side, and these credit balances appear on the balance sheet liability side. Okay, on the liability side you will find capital of all the partners Rohan, Sohan and Mohan are shown the same amount, 3,15,860 and 2,84,590 and 3 lakh rupees. So the total capital of the firm is 9,450,000. So now is the biggest moment. Okay, you have done all the adjustments. You have taken into all the information given, even the hidden adjustment. Now your balance sheet should tally. So please add up all the liabilities. Please add up all the assets. If you have done everything correctly, you will get the balance sheet tallied. So that's it. Are you happy about it? Thank you very much.
Prudent Scholars, powered by Lupin Pharmaceuticals.